The information in this episode is current as of the date recorded and is not intended as financial, tax, or legal advice. You should consult your tax, financial, and/or legal advisors before implementing any transactions and/or strategies concerning your finances.
Hello, my name is Jakob Brost, and I'm here to talk about some new notices that the IRS has issued in regard to your required minimum distributions. So, the IRS has recently released some new notices on required minimum distributions that may affect you. Currently, accounts inherited after 2019, where where you are not an eligible designated beneficiary, you have 10 years to fully withdraw the account. Now, there's two caveats with that. If the person you inherited the IRA from, had already started taking required minimum distributions, then the beneficiary is also required to take required minimum distributions over that 10-year period. Now, if the person you inherited the IRA from had not started RMDs at the time when they passed, and now you have inherited that account, you are not required to take any RMDs over that 10-year span, but the account still must be emptied by the end of the 10 years. So we'll get into planning opportunities with that later, but it still might be in your best interest to break up those distributions over 10 years if it is a traditional and taxable distribution. To continue on, the Secure Act 1.0 didn't really specify clearly for two types of beneficiaries. So for the past few years, from 2021 to 2024, they have waived the excise taxes on those required minimum distributions. Now, the excise tax is the penalty you pay on those distributions if you do not take them out by year end. So in essence, you technically didn't have to take the required minimum distributions. We'll get into that more, but before, let's just define those two beneficiaries that they were talking about. So the first one is a designated beneficiary who is not an eligible designated beneficiary who inherited a retirement account from someone who is already taking required minimum distributions because they died on or after their required beginning date. The second beneficiary is a successor beneficiary who inherited an IRA from a primary beneficiary where the primary beneficiary was taking life expectancy distributions. Now that we've cleared that up, let's get into the big difference between required minimum distribution waivers and excise tax waivers, as that seems to be causing a lot of confusion for a lot of people. First, let's look at the RMD waivers. So this gives you people the opportunity to not take the RMD, but also extends the 10-year period for the drawdown. So say they inherited the account in 2022. At the beginning, it would need to be emptied at 2032. If there was a waiver, say in 2023, you don't have to take the RMD. You can certainly if you'd like to, but then the account does not need to be officially emptied until 2033. An example of this was in 2022 with the CARES Act, where they waived RMDs. Now let's get into the excise tax waiver. So again, the excise tax is the penalty you pay on RMDs if they're not taken out by year end. We're not going to get into the specifics of that, but they are significant penalties, and you want to make sure those are taken out well before the end of the year with holidays and vacations for sure. So while there was an RMD waiver in 2020, there was excise tax waivers from 2021 to 2024. So while waiving the excise tax means there's no penalty on not taking any distributions, this does essentially mean you don't have to take them, but that might not be essentially in your best interest because it does not extend that 10-year period. So say the same situation where you inherit the account in 2022 and there was waivers in 2023 and 2024, you still need to have that account emptied by 2032. And depending on your tax situation and if it's a traditional IRA, that might not be in your best interest. One other note I just want to point out is that with the RMD waiver, there's no need to also waive the excise tax because if the RMDs are waived, there's no excise tax implications. So now that we've kind of distinguished the two, let's get into some planning considerations for both of them. With the RMD waiver, this essentially gives beneficiaries an extra year to take out money from the account, which can cause them to take smaller distributions over the extended period of time, also which could increase their they're essentially their take-home amount after taxes if it's a traditional IRA. With the excise tax waiver, by utilizing this and not taking out distributions, you're essentially doing the opposite of what we talked about with the RMD waiver. You're increasing your future RMDs since that 10-year period is not being extended and it still needs to be taken out by the 10th year after you inherited the account. In other words, this can increase the taxes paid and can lower your take home. To get a better idea of this, let's put it into an example. So say you had a $1 million inherited traditional IRA from, maybe a parent or something like that, and you got it in 2021. So say you saw the excise taxes were waived from 2021 to 2024 and you didn't take out anything for those 4 years. Instead of taking out $100,000 each year, assuming no growth in that account, you're now going to have to take out $166,000 in RMDs, all of which is taxable to you on your tax return. $66,000 is a big increase and a big change on a lot of people's tax returns. This could bump you into different brackets and cause some different tax implications on your return. And essentially, it's really decreasing your take home from that inherited IRA. On the other hand, maybe you're working right now and you expect your income to drop significantly in the next couple of years, and that could be a great strategy to utilize with those excise tax waivers. But in total, it's definitely something you need to consider and make sure you're fully aware of when you're deciding to take or not take these RMDs, because if it's traditional IRA you inherited, all of that money is taxable. But you can also consider holding off because any growth taking place in that account is also tax deferred. So now that we've talked a little bit about traditional IRAs, let's also distinguish the difference between Roth and traditional IRAs. Roths have no RMDs, whether it's your Roth or an inherited Roth. With that being said, when you inherited a Roth, you still have the 10-year drawdown period no matter what. But since these accounts are extremely beneficial on the tax side of things, in which any growth in the account is not taxable to you and any distributions from the account are not taxable to you, it's generally best to hold off this distribution until the 10th year to allow for maximum tax-free growth. Again, with the traditional, there's a lot of planning that goes into this. You need to take into account your tax situation currently and your tax situation over the next couple of years and what kind of brackets and income you might have in those years. There's also planning if you inherited the account and the decedent or the person you inherited the account from, if they hadn't started taking RMDs yet, you may not be required to take any RMDs, but you still are required to take out, fully empty the account within the 10 years. There's a lot of planning that goes into that and your tax situation over the next couple of years. Another important point I want to point out is that if someone took out an RMD in the year it is waived, maybe they took it out before the RMD was waived or for whatever reason, those funds are eligible to be put back into the IRA and continue to go tax deferred since it was waived. This is not the same for an excise tax waiver. If you take out your RMD before they announce the excise tax waiver for that year, it cannot be put back in and you're just in the same spot you were. So in conclusion, it's very important to distinguish these two waivers between excise tax and RMDs. They can cause a lot of problems, especially in the future as you start to take out all of those taxable distributions if it is from an inherited traditional IRA. And you definitely want to make sure you're taking home as much of that as you possibly can. So thank you for watching this video. If this information was useful and you'd like to hear more or find some more videos on it, please subscribe to our channel in the lower right-hand corner. Thank you.